What is up, everybody? Welcome to the Russell Journal. My name is Russell. This is my journal entry for Tuesday, February 21st, 2023. All right, coming into today, we're going to start by kind of going over the TA, talk about the swing trade setup I had for the weekend. More or less worked out beautifully. Few little glitches into the end of the trade, but other than that, did work out as kind of exactly as I thought it would. And so we're going to talk a little bit about the TA. So this is SPY, the S&P 500 cash equivalent ETF here, proxy, whatever you want to call it. That's what we're trading on. You can see here we are on the weekly chart. This is the weekly time frame. You can see the resistance in the market has been the 100-week moving average. And you can see that we have been kind of trending in this downward direction going into our third week now. All right. So here's kind of how the setup I have works, and it's cool because it works on just about any time frame. So the way the setup works is that you use the slow stochastic and you use the lines above 80 and below 20 on any time frame. Doesn't matter what time frame you're using it on. When the lines come out of 20 or come up from above 20 or they come down from below 80, you are allowed to initiate a trade. That is your initiation point. And what you will target then is the closest main moving average. And now this is a little bit of a wobbler because depending on what time frames are, it's not just that we go back to the main moving average or to a main moving average, but the average and the price will make a run for each other. Now this is a weekly time frame, so what you can see here is price made a beeline basically for the 50-week moving average, which is also another form of TA that does kind of sort of dictate that a rejection of a main moving average will send you back to the next closest moving average. Okay. Now, in this case, it was from the 100-week to the 50-week. Where we initiated this trade was on Friday. We initiated it because we were at 80. We were not below 80. However, you were under some pretty extreme selling pressure here. And if we, for me, where I was at was that we would either open above or below 404. If we opened above 404, my short trade would have failed. And if I opened below 404, I was free to initiate or free to maintain this trade. Now, into the opening hours of the day is where I kind of got screwed up within the first hour of the day. Normally, I don't trade the first hour of the day, but this is a swing trade, so I have no choice. I'm in it. We opened up. I purchased from here. I targeted the 400. I figured we would be looking at the 397 level right in here. So what I did is I initiated the $400 puts expiring tomorrow, not today. They will be expiring tomorrow. I wanted to make sure that I wasn't going to get cremated on theta. So in the event that this move happened slowly. And as we go through the rest of the TA for today, I will show you sort of what happened there and what was really going on. And so stuff like that. So again, you can see though, in theory, basically the trade essentially worked. It was completely a market reaction. We're not predicting. We have our valid price targets down here. And there is a little bit of this that is attempting to be predictive. You can see here that 397 is that moving average. And you can see the low of the day was actually 398.83. So we were within $1 of hitting that average today. And that's something that's going to lead us into the sort of title of this video and what I want to talk about here. Because I tried a couple of other things today relative to this. Hold on, I got to move the chart around. Okay. So we're going to go to a 1 hour time frame. And there's a few things that are really interesting about this 1 hour time frame. The very first thing that you'll want to notice is that there is this gap here. But according to Peter Resnicek and Shadow Trader, this is not considered a true gap, or as far as Peter Resnicek and most traders are considered, this gap is actually closed. Now, there are those who will argue that it's not until there's equal candles on the other side all the way up into this space. But most of the guys that I've followed have often basically said, as long as you've reached up, touched the low point of the day. So if we gap down, if we hit a point where we touch the low point of the previous day, that gap is more or less considered closed, or it's not considered a true gap. It can come back and get this space will get filled later. It is the S&P 500. We will go up at some point. That will happen. That, you know, equity growth is not over because we're in a bear market and have inflation. It's just not happening now. So, but you can see basically here where we gapped underneath this line. Oh, and this. Let's go back to a couple of other things really quick into the. We're going to go into the. Okay, so what you have here, so we go from the weekly chart to where we see the move happening. All right, where you are is in a position of you're in this bear trend. Okay, it is a bear trend as far as it goes. You have lower lows, lower highs. You are trending in the downward direction. The cool thing that happened here was on Friday, it gave us a retest of the 18-day moving average, but did not get above that. That was a fair shot for us to initiate a short trade in a swing setup. Okay. As far as you know, what you would say is you tested support, but you tested that as resistance, and it didn't get back over it. So that in a lot of ways is confirmed. There are other guys who have a confirmation form where like it actually has to reject. You need a red candle coming off of that to confirm the rejection pattern. For me, I don't usually do either of those because I tend to use the slow stochastic to sort of dictate which way momentum is going to carry this market. So, and that was the other thing too, is upon the close of the day, you could see the widening between the momentum and between momentum and price lines on the slow stochastic, which means that it was going to have to come down and turn around. They're going to have to turn momentum in order to get this to go back up. So the idea that this is just going to out of nowhere pop, it's going to go from here and pop back up into that. There wasn't a lot of signals to convince me of that. And at the same time, now again, I don't use this very often. I have it on from time to time. And sometimes the other thing is Webull likes to just turn this on my broker for some reason, even though I turn it off all the time. But I did notice on the MACD, you have this separation as well and you also have these bars that are the separation is expanding here on the daily time frame. So as far as I'm concerned, the whole setup was very, very, very clean, very clear. And the risk was basically to my where I was at with it was my risk was to theta, which I was able to curb a lot by basically by I was able to curb a lot by buying further expiration. Okay. All right. So here's where I got into a really weird spot into this. So we open up in the morning, we open down, we bounce up. I haven't actually initiated a stop loss at this point. Okay. Into this setup. I'm expecting there to be a bounce. I'm looking for it. If we break above 404.05, which was the low of the day from Friday, the trade was going to get cut. It would be if we broke above that and stayed above that, I was out of the trade. As far as I was concerned, we had reclaimed the what would have been resistance at that point, or what should have been resistance. As a matter of fact, we can go to a larger time frame and look coming in here. So you can see the rally up. You've got these support sort of zones between 405 and 404. They've really held this sort of this consolidation sort of up through here. All of this stuff that was happening through here. You really did bounce a lot off of these spots. That's where you bounced there. That's where you bounced there. That's where you broke out right there. Right. So what you would really expect to see as far as like your technical analysis standpoint is you would expect to see this once you're below this, you would expect to see this at some point come back and be retested. And as resistance, you would expect that it got up here into this 404 range and it would be resistance. Once you have the break below, right? It gave that up. You can see also where we also had support on Friday, which was from below this, on the 4 hour, I think that's the 18. That is the 50. So you had that. And so as soon as I knew we were going to get a gap below that, I was pretty sure we were going to be safe as far as that goes. Okay. And we had momentum. All right. So going back into the rest of today and to how this whole thing sort of panned out. So here's where I got into trouble with this trade is I was watching this. We got the break below. And then we got the break here of swing low, okay? So basically what happens is the bottom of this candle, even though it's a green candle, creates a swing low point for us, okay? Especially coming in the end of the day, beginning of the day, we don't have all of this other stuff here. So we're building this chart as we go along. So you're looking for a break below. So as soon as I get a break below, I start to move my stop loss up into a spot where no matter what, I'm going to be able to secure some profit. So at the point we opened this morning, I was back up here. I actually bought these into the top of that candle in the last 5 minutes or so of the day from Friday. And when I saw what was happening with the slow stochastic, I thought, well, there's no way that the futures are going to hold that spot. And if they don't hold it, then SPY won't hold it. So this created our swing low point. So you get up, you basically essentially satisfy the true gap. Okay. So the point we opened down here, the true gap is from the opening price to the previous day's low because it is a gap down. Now, if you are in a gap up situation, as Peter Resnicek explains, if you gap up, it will be the true gap will be the difference between the opening and the previous day's high. And that's what he calls a true gap. I suggest go to my Instagram. I have the gap rules posted there at the Russell Journal on Instagram. And the other thing is I have the gap rules there. I also have you can also go to shadowtrader.net and Peter Resnicek gives those for free, the stuff. And if you're an options trader, I highly recommend anything Peter Resnicek and Shadow Trader do. I have traded with them. I can say they were very cool. They are a little pricey. And they trade some pretty crazy option structure strategies. You know, they'll be buying and selling options at the same time. So it doesn't work for me just yet because I'm only buying single leg options and I'm only going long puts or long calls. I'm not selling anything. So, but if you have some money and you really do want to trade options and you don't know Shadow Trader, I can definitely speak to how good they really are. Now, so here the thing is like what happened here is we get the break of swing low here, and immediately this one green candle comes back and it holds up there just long enough to stop me out. So I was in these from up here at 55 cents. I had moved my stop to 92 cents. And at the point we opened, they were at $1.17 for those two puts that I was holding. So I left quite a bit of money on the table there. And you can see here from the rest of the sell-off throughout the day, I left quite a bit of money on the table as well. Now, one of the things, and that which is going to bring me to sort of my next sort of situation, which is where I find myself a little bit confused in some of this. So if you remember Friday we also had a very good trading day. Coming into here, you have this move down. It is fairly aggressive. You've got lower highs, but you start to flatten out and create, only slightly lower highs, right? They're not really big highs. And from the point here, you catch this. I caught it literally on that candle. I said, well, that is clearly support. I went long into this and I caught pretty much all of this move up into that moving average right there. And was pretty pleased, especially given that this guy, Nick, that I've been being coached with, and I've been doing some he's been coaching me a bit and we've been talking, even though I said I wasn't going to use him. We just kind of keep winding up talking to each other, and he's really helping. I was really pleased because one of the things we talked about the previous night was the idea of being emotionally prepared for a trade before you take the trade, right? Instead of trying to manage your emotions in the trade, he has this really sort of novel approach to managing your emotions before you take the trade. So this is something that I was trying very heavily to do. I am still trying to master my concept of risk management. And in all fairness, so if I go to today, just going to jump forward a little bit and then we'll hook it back. So from the move up here, it's funny. The move up here only put me down, like my contract was hovering about $1, between $1 and $1.02 on this move up here. Get this move down here, it only goes up like to $1.10, and then into that one green candle that really came back and got me from $1.10 all the way down to 80 cents. It took $30 off of my premium, or off of the premium. So when it did that and I stopped out at 92 cents, I was very grateful, thinking, well, this is going to hook a gear and try and get back up over 404, especially because this had been fairly bullish. So to do this as your only test seems a little bit odd. As well, there's some things that are going through my mind at the time. Tomorrow you have some pretty big catalysts coming out. You have GDP numbers coming out. You have FOMC minutes coming out. You got Fed speakers coming out, right? And then on top of that, this morning you had two sort of things that were very interesting. One was one that was negative. The retail sales, or the housing sales, were down 0.7%. So they were down in January, which isn't even really that odd. The housing market's not really hot in January ever, right? As a matter of fact, the time during the pandemic when through the winter months it was hot, was only because of the low interest rates. It actually didn't have anything to do with the season. But seasonality wise, January, so having down that much in January, not a big deal. At the same time, you also got one of the best S&P services, both services and manufacturing PMI numbers that you've had in 7 months. They're very good, very strong numbers. So the idea that when those came out, especially here, so they came out on this candle in the 15-minute mark right there. So the fact that this took that and sold off from that seemed a little odd to me. It did seem a little bit weird to me that it did, but it did. It came back, it took out my stop, and then it just kept going down. And then from here, one of the problems with a big move, with a move like this, is typically if you're not already in that move, if you're not already in there, it will not, if you're not already in this, right? If you're not already in this trade, then you really can't, where do you go? How do you jump in that and manage your risk? where do I, this move is just grinding in one direction. Where's my entry? Where's the peak to go short? Where's the low to go high? What do we do? And it really is, it creates this sort of place where like you don't have an actual trade setup coming into this. And this is where I got into a little bit of trouble today, is that you can see here off of the lows, this is where I decided to take a long position into this little bounce. Now, this is only about $1. It's not a very big bounce. And especially as far as options go, it really is crippling. And I did play it with very, very tight stop losses right below the swing lows here. And because we didn't get up and didn't get very far, it was like I was out $20 when it didn't, that was where I was out. And I was fine with that being up $70. But then we get into this sort of end of the day thing. And this is something that I think is really interesting. And I want to go to a shorter time frame. I'm going to go into this 1 minute chart here, because there's something I want to show you, is that at this point here, right? And let me see if I can wheel in on it, because the volume candle that was there it is. Okay, so this point here, the price action begins behaving very differently than the rest of the day. You can obviously, that there's this slow grind down from the rest of the day. Then all of a sudden you get this pop up, and there's a sentiment change here that is different. And it is not bearish, and it is for sure not bullish. And this is something that I can only really consider as some type of consolidation. And the thing that I think is very interesting is how it consolidated across these moving averages here, and between them. And you can see here between and this is a 3 minute chart, so you can see we get up to the 100 or to the 200 here, but we really keep bouncing between the 100 and the 200 there. And so it's on the 3 minute time frame. And so there's this really weird change that happens. And the whole time I'm expecting this to be the bounce that is going to let new shorts in for the continuation down to that 397 price level. So we get in here and we come into this, and I go short into this market. Now, it was a very minimal short. I bought 10 contracts for 9 cents a piece. So I'm in at 90 cents. I got the 397 targeted as far as what I want to do. One, because down there, I don't want theta to like do anything. And if we get stuck into power hour, which I did, I didn't really want to be in that. And then the second thing is normally, and where I come in is this break here of momentum to here, right? And in this move back here, I'm in it. I'm about 6 cents green on this, but I'm not ready to set a stop loss just yet. And part of the reason I'm not ready to set a stop loss just yet is because I'm not wanting that stop to be taken out until we create some type of pattern. Okay. And so we get in here, we get down here. I'm green 6 cents. We're looking like we're going to get ready to tip over down into, but then you get into oversold and it bounces back up, right? Back into that 200 average. And this takes my 6 cent profit, and with it, it took a few pennies of my thing. We get this pullback into here, and that brings me down from my 9 cent entry to a 2 cent loss on it. And as we get this move up here, I'm out of it at 6 cents. So I'm losing 3 cents per contract on that. So it's about a $30 loss on this. And it's really an interesting setup as far as it goes. And it's a thing that I think that like I've never really considered. We always like talk about price action in the form of, is it bearish? Is it bullish? Well, if you go back to Friday's trade, where I traded kind of a similar sort of thing, where we pushed up against the level and then we broke down from that level, you had a sort of bearish price action in that, or a bullish price action coming into that. That was very clear to see. But into this consolidation, what is very interesting here is that you have into this consolidation here, you have the it's like I said, it's a third type. It is a consolidating price action. And I think it's something that's interesting. It's something that I've never truly stopped and considered before. Things on SPY tend to be up and down and up and down and up and down. They have a lot of volatility in this one index. Part of the reason why I like to trade it. And the other thing too is historically, I think the market does do a lot of this more often. My experience comes from about 2020 moving forward. So there might be a bit of where I have some unrealistic or unknown, maybe I'm expecting these volatile moves. And I have heard tell that it's not always like that. Like it's really not as much opportunity. I think we've been spoiled through the bear market and through the bull market of 2020 with some really wide-ranging stuff, and that there's actually these points where the market will just consolidate like this, and so it's not something that I've considered very often. And the thing that really sort of interests me about it is, where does my setup fit into this? Like, a long move, that's, as far as I'm concerned, a false move into a double top. A long move, this is also what I consider a false move into the resistance, can't stay above resistance. Right. Short move, same thing in the other direction. So my setup that allows for the slow stochastic to come up out of overbought or down out of oversold loses a bit of its power, a lot of its edge into a consolidating market. And so one of the things I'm very interested to sort of learn is, where do you actually have a consolidating market? Where is that actually at? And the thing that I find very interesting about this is our low of the day is still $1 above the 50-week moving average, which was my price target. So and if you go back to those other charts, there's not actually a lot of stuff underneath there between here and there. And even furthermore, there's other stuff that's very interesting. If we go to the daily, right on the daily, am I on the daily? Yeah. So what do I got on here for some reason? Is that so I got the 20-day, the 50-day, the 200-day. Okay, so I guess I do have. So, I mean, I guess I didn't see that for some reason. I guess the 50-day moving average on the daily is what is stopping that at this moment. That's what stopped it. What is the price on that? I got to zoom in to see it. No, even that's at 396.50. So I don't really understand at 399 what is forcing this to consolidate. What's causing this to stop? I also can't help but wonder, if you're a trader, do you attempt to if you captured this, are you just taking profit, or are you going to try and hold even through a bounce? Are you looking to pyramid a position from a bounce? What are most major traders thinking about doing? I'm very interested to find that out. So let me go here. I want to come back here. I do want to see if there's anybody in here. Okay, so there's nobody in the chat. So I am going to hang this up there. That's a little bit of my dilemma into trading this week, a little bit of my confusion and stuff like that. Really got into that end of the day consolidating market, and I made some mistakes in there. I think that there's some emotions that let me in there, but I think some of the emotions come from not understanding that consolidation period and where and when to enter in that consolidation period, or when we're coming out of it or going into something else. So I'm going to work on that a little more. I did do a lot of work on the time frames. I do note that there is a period where you have to, if you go back to Wednesday or Thursday show of last week, where I talk about really understanding the movement from one time frame to another. You do tend to want to have some type of anchor chart that is your main chart, like the 15 or 30 minute, and then everything you're doing is sort of based off of what's happening on either the 15 or 30 minute. The movement is all relative to the 15 or 30 minute. So that helped a lot going into Friday, especially with the emotional preparation that I did. Had what I thought was pretty good emotional preparation. Did not really, none of the trades I had were emotional. They were definitely activated by what is considered my trade setup. But there are some things about my trade setup that are still being defined. What is consolidation? What is, and don't trade consolidation. There's other period, like there's things I don't trade. I typically won't enter a trade into some type of triangle pattern, things like that. I'm not willing to gamble on which side of a wedge a stock is going to break out. And to be honest with you, I think that most measured move stuff is hokum. I don't really think it actually, I mean, the danger of that is becoming predictive trader. And one of the habits I am fighting like hell to break is not being a predictive trader, right? Not trying to predict the move. Simply support, resistance, price targets, entries, price targets, risks. That's simply it. React solely to the movement of the market. So I'm not trying. So I'm really trying to break that habit. And the more I do it, the better I'm getting at trading. The better I am at managing risk and all of those things. The more I stop that. But there are things, little nuanced things that make a big difference in the trading. And I think that, I got a clue as to one last week with what time frames am I watching and now really adding that third concept of price action, that consolidation, that I think that will really help. So anyway, I look forward to reporting to you guys tomorrow and letting you guys all know how it works out, how everything goes. For the Russell Journal, I'm Russell, and the show's written and hosted by me, Russell. We are produced by Social Media Shows. Our executive producer is Maria Pereza. And, just until tomorrow, just pretend I have an actual catchphrase, because I don't want one.